No, well, there are a few reasons for that. I think there's sort of the overarching one, which is looking at where different parts of the world are in the COVID sort of infection and eventual reopening cycle. And I think because some of that started sooner, especially in parts of North Asia, we're much further along that path. But ultimately, it's also about whether where you also see a little bit of value, and I think and responsiveness to where we might get policy stimulus. So if we think about China, Chinese equities in the region are sort of a preferred area within the equity market space. That, of course, is an economy which is further down the reopening path, and they tend to also be quite sensitive to any policy stimulus that may be coming through. So that's one positive. But also on the bond side, Asian dollar bonds tend to be higher quality. They have demonstrated that their low volatility characteristic has held up pretty well in the first sort of part of this year. So both of those factors in our mind sort of make us prefer Asian assets when you're looking across the equities and bond space.
Right, but is China really further down the recovery path? If we just look at those inflation numbers today, weak inflation numbers out of China, both on the consumer and also producer level, really underscoring the challenges of this recovery for economies moving out of course, the lockdowns and, of course, the economic collapse that we've seen as a result of coronavirus.
Well, indeed, you're right. And I think what it demonstrates that you can reopen the economy. I mean, China has arguably reached the reopening stage, but it's also approaching what may be some of the challenges with that reopening process as well. And I think there are a few to keep an eye on here, right? I think one is some of the challenges on the deflationary impact. I think that's one which comes through on the inflation data. That can be temporary or that can be a longer lasting. And I think how policy response will be quite important. And the second, of course, is whether we indeed get another wave of COVID infections or not. And that may be something we've yet to see. But South Korea, for example, you can see from the headlines, that remains another risk. So. Look, absolutely, it raises the question about what nature the recovery takes. I think one lesson is that not to be excessively optimistic, but also we need to process the data as it comes in. And at this point in time, especially if there are more stimulus efforts, whether it's from the central bank in China or from the fiscal side, we think that will ultimately be more positive for the equity market. But equally, that's why we think the high quality bonds are important, and Asia dollar bonds do offer that.